Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. Let's see, where am I at here? There we go. It's starting to load up now. We are getting, so I'm going to try that one more time. We'll see if we need to do that one more time. Okay, there we are. So, anyway, all right. So the only news that came out today basically was the stocks, the bank stocks. You know, the top bank stocks. They're all, and then they come out on Monday. There's more on Tuesday. Like Monday, I think it's like Goldman Sachs and a few of the others, and then on Tuesday it might be like Wells Fargo and Bank of America, and in other words, all the major banks. And so they're showing. They had a better return than the Nasdaq or the Tech 100 last year. They actually outperformed that. Bank stocks really were in favor, and usually they are, because when interest rates are rising and inflation is rising, banks do pretty well for a while, and then what you get is you get a choking. A little bit, in other words, of the what they call the pipeline. In other words, people borrow a little less, interest rates are rising, they start to think, I don't want to, I'm going to slow down, I'll just do a little less this month, and it goes on and on and on, and then they start to pare back. In other words, they start to slow down to the point where their earnings start to break even instead of gaining, and more people are having problems trying to start a new business. See, March import prices they were the same over the same month last. Was it or 4/10 up actual, and that's what they were expecting. So March imports were doing a little bit better. I didn't, we're not taking it apart right now to figure what that is, but that's the headline. So as you can see on the screen there. You can see that there's, you see the dollar index there on the right. It's making another high. They are smacking the currency pairs down and buying dollars. Why? I don't know. But, interest rates are not really rising that much. They're just staying status quo. They've already risen. But today I would have thought it would have been the other way around. I would have thought it would have been kind of chill, and like not too explosive, but no, it seems like they're punching on it, and that's really got me like, wow, that's a kind of a surprise, at least in my head. Let me answer this thing here. No problem. Set for 30. No, just and more if needed. There we are. So that's what we see here, and it is a surprise to me. Let's go over to the other screen, and I'm going to show you let's show you the euro. I'm really surprised that the euro is getting pounced on like that. Let's see. Let's go over to it right now. That is, what is that? That is the euro. Okay, look at that. We're down at the lows. And there's where it closed yesterday. And I'm really surprised it's gone from the 107.20-ish area down to the 106.50 area, basically. Kind of a real surprise there. I wasn't expecting that much damage. I know it's the bottom end of the range. I'm not that deeply concerned about it. Here's the euro on a daily and a weekly. You can see we've been in a daily sell for 3 days, and we've been in a weekly sell since back in here, in this area here on that blue line, and it sold down and then lifted back up to it again a couple weeks ago, and then and jumped into the buy to protect you there. Not much protection, but it did, and then it pushed it back into the sell again, and now we're almost down about the same amount. Again, when you really look at it, we squeeze it up and try to get a bigger flavor. You see, it's just going back down into this area back in October of last year. It's not that damaging. It really isn't that damaging. It's a kind of a sideways action. but in a nice wide range or an envelope, whatever you want to call it. Sometimes we call it just a channel. It has that channel look to it, not like the one across Calais, but you can see here it's been in this sideways gig now since March. There's February right there. You're looking at February of 21, is that? No, I'm sorry, that's February 23. Okay, so for the whole year, it's been cruising along in there. Let's see if we can get some more. And there you can see, just a little bit more in here. I think it's going to generate higher highs. This was the first lower high. I'm sorry, lower low. Higher lows. That's what I was trying to say in English. And you can see it, and then it finally broke down. And now it's got that triangle look to it, like everything else has a triangle look to it, or a flag. Hey, Robin. And so, at this point in time, I think that the nervousness of the market pretty much is elections. Right before this phone call, phone call. Right before this webinar, I got a phone call like 6 minutes beforehand. Someone said they had seen Trump down in Atlanta, and they saw the video on it, and they were like, "I can't believe that. I mean, this guy's going to win big." I mean, it was a very powerful video of him at a fast food restaurant, and people were just gathering around him, all races, white, Oriental, African American. They were just all gathering around him, and they were cheering him. And it was more African American cheering him, cheering. It says a lot, and that's why I think you're seeing these markets. And we've been saying that we don't expect lots of big moves. We expect moves, of course, but nothing major. Not like the world's coming to an end type thing. They don't know. They want to believe the polls, and they want to believe, but the problems with election integrity really have them all nervous. I think that's what it comes down to. All right, from there, let's just go back to the dollar index one more time, because it is fascinating to see that move. I didn't think we could take out the 107, but we're up into 106s now. And it's like, wow, I just didn't believe that was coming around the corner. And still don't believe it. But, with this amount of pressure, let's see, where is it at? Dollar index. Oh, not there. Cancel. Let's go over to the dollar index there. Right there. And so there's the dollar index. And it's reached itself up to the 105.68. I think the high today is 105.73. For it to get up into that 6 and 7 area is about as far as I didn't think it would get up there again. I just figured it'd stall out around 105 and a half, and we're just a little above that, which has my eye. I'm paying attention to it. See, I can't get much more than that. But that 107, 106 and a half area was a big, strong area for a long time. About 2 years back. So since this is a futures contract, it doesn't do as good a job of showing that. Going back historically, that's why I like using the Dukascopy charting service, so I can go back and look at deeper, longer-term views, just to get a flavor of where people have been committing capital. Like you can see here, they committed capital here 3 times, and then finally took off. It fell back to it again, and they started committing capital there, and rallied up again. And now now this high area here, which was resistance right there, is becoming more of a support. And that's, again, we were really surprised about that. We follow the math, and we stare at, and that's what we do. We watch the math more than anything else. But I wasn't really thinking that we were going to get much more action, because, I knew that we may only have like one interest rate increase. But this administration doesn't really pay attention to the law. So it's a really, if he was really paying attention to the economic data, they wouldn't even consider a increase. but they want interest rates lowered. And the administration is telling the Federal Reserve, lower those damn interest rates. And so far they haven't done it. They've held back. And the smart money, when it comes to, economic data and so forth, says basically there shouldn't be a rate decrease until, maybe 10 more months, maybe 15 more months, something like that. But, they do what they want to do, and they break laws, and then they get stopped for it, and then they go break another law. That's what this administration does, and that's why the markets are trading in a triangle, because they believe the polls. They just don't believe that they can trust the integrity of the elections. That's the problem. They, all of a sudden, they think they'll do what they did in Atlanta and those other places. All right. So, let's go take a look at the cable. See what the cable's up to today. And I'm not on any particular tear about the Federal Reserve today, because another Fed governor comes out and says, maybe only one cut this year. They're all trying to tell Powell, stop saying 3. It's not happening. There isn't a 3. Maybe there's a 1, and that's because it'll be politically motivated more than anything else, just to start the ball rolling, that type of thing. All right, let's go over to it. Let's see, where's it at? Cable. Let's go find cable here. There you go. There you go, right there. So, as you can see right there, there's the cable. Again, where's the red line go? And, it's pressing down, not really chasing. This is even more stable. That's the interesting one. Matter of fact, when you go, you can see 3 weeks in a sell on the cable against the dollar. But as you go over to, hey, Janos, let's see, when you go over to Euro GBP, you see it's been breaking down. The Euro's been kind of weak against the cable. Let's see. DNUT. Sure, I'll put that up. Let's go find it. DNUT. Let's see, where do I go? I'll go right here. Open Sesame. Okay. All right, let's see. Let's activate and get rid of that. There we are. And then we'll put it in there. Let's see. And let's make a copy of the arm. Activate. There's the arm. And now let's make a copy of it. Copy. And paste. Okay. Let's see. Instrument. Add a symbol. What's that? DNUT. DNUT. Look up. Let's see. We'll find it in a second. And okay. Here it comes. Let's see. Let's widen this out. Let's see, so you can see it. Alrighty. There we go. Alright, and there's the weekly. So it's been in a weekly buy with that move up in here. Went into the weekly buy there. It wasn't a weekly sell. Let's move that over a little bit more. So it wasn't a weekly sell for a while. Went into the weekly sell at the $14 area and fell all the way down to the $12 area. It's a very tight market. I think we may have looked at this before, haven't we? It seems familiar. And then let's move the zero line down to there. Let's see what we got here. Let's move these guys out of the way. Well, actually, he goes right there. And the sell was right there. And the buy was right there. Maybe even more over, let's see. Buy was right there. Wasn't a daily buy for that move there. That's pretty cool. So you weren't short it, that's for sure. And then let's widen it a little bit more. There we are. So it went into the buy there. Let's grab one of these sells. Went into the sell right there. And then move that sell over to there. And grab this buy right there. Into the buy there. And then there's your other buy right there. But you can't take it because, again, you're in weekly sells. Track's pretty decent. It's got some half-decent stats right there. And again, it was in all along this way. It was in a weekly sell all the way up to right there. Let's put a weekly buy in there. Like that. Went into the weekly buy. Went above the weekly buy number right there. And right there. So went into the buy right in here. You know, crossing the line here. Interesting. What kind of news made it go flying like that? I don't even know what they do. Let's see if we can find out what they do. Let's see what donut does. Is that like Dunkin' Donuts? Maybe it's Dunkin' Donuts or something like that. As we used to say, Drunken Donuts. Oh, that's Krispy Kreme? That's Krispy Kreme, okay. Yeah, I heard something positive about them a couple of weeks ago. I forget what it was exactly, but the math was picking it up on the daily at that point. And then the weekly joined in the day before of it. And then they zipped it up and pushed in the sell. It seems to be sideways at this point. And let's see. What is their... Yeah, it was the earnings per share was minus 23 cents. I heard that part. I remember something like that. That really... I think they needed cash or something like that. And they were closing something or doing something like that. Exactly. Doc, I will ask this straight. Okay. Does that mean soberly or what? Yeah, that's the action there. And the wife are heading on a trip for a wedding anniversary, but that is 2 months. So we got the cash for this. Oh, so you're thinking about buying this here? It doesn't pay it. Dividend. Let's see what the dividend is. Yeah, some people were thinking that it's already gotten up there once. They're talking about 1762 as a target. The earnings disturbed me a little bit. Ex-dividend. Oh, there's a dividend. 14 cents. Okay. So as long as they keep on paying that dividend, is that? And I thought they cut the dividend. I thought that's what they were doing. That's why it jumped. 2 months. I wouldn't play with it for 2 months. You'd be better off putting it into something that generates 4 or 5%. I wouldn't go after it, especially with the way all these things are triangling. You know, they're all triangling left and right, or turning into channels. They're all they're contracting, basically, or consolidating. They're just standing to the side. I wouldn't get involved in that. Now, dollar cost average, I wouldn't put a lot of dough into it. If you want to buy some, let's say you were willing to buy, let's see, it's $14. So that's basically 100 shares is basically $1,500. Okay. So, I mean, if you were willing to buy 100 shares of this, I'd buy it in slices. 10 here, 20 there. I'd do a dollar cost averaging into it. I wouldn't rush into this thing. It's trapped up there on that plateau, and then, you got that gap right here. There's the old philosophy of gaps get closed. So I mean, if you start buying once a month, at 10 shares each, and they go and close the gap down to 12, you'll be very happy that you didn't just plow into it. The only other way you would do that is you buy the 100 shares and sell the call and buy the put. That's the other way around to do it too. And do it in like 4 or 5 months out. 5 months out in premium. And for the put, make the put 2 months out. That type of thing. Where can you park it for 2 months? Can't you buy like municipal bonds, something that is tax free, or generating 4 or 5 or 6% over there? It all comes out. You can create your own bond too, if you're willing to do the options with it. In other words, imagine if you buy this stock and you sell where are we at now? We're in April. So let's say you sell the August calls and buy something like the July puts, or you buy the June puts. You're creating a bond either way. And so you get into the position and you do it for a credit, and if it expires and you sell, say, something like the 16.5 or 17 call, say the 17 call, and I'm not even sure where they're at, just a wild guess, a buck and a half, $2, something like that, a 17 call, and in August, and then the put, like a 13.5 put or something like that. Let's see, not even as in bonds, municipals. Where can I pour? Oh man, bonds, municipals, all that is not even an infant development level here. That's bad. Eastern Europe is full of schmucks taking advantage of people. The top advertised Pendleton Fund, it literally had the commercial, we will buy S&Ps. That is all like freaking out. Bonds, forget about it. All right, then create a synthetic bond. Look at the options. Get me prices. Give me prices of the options. Can you do options on it out of Amsterdam or London or the States? Doesn't really matter where. But in the end result is, let me see if I can get the options up on this thing. Oh, where am I going for the options? Let's see. Let's see. There it is. I'm going to open up the options here and see what they are. Good. Okay. I'm logging in now. I'm heading for the... I don't know if it'll jump up on the screen or not. We'll see in a second. It's loading. And we'll put donut in there and take a look at the options. You can create your own synthetic bond using options. Okay, here we go. Let's see, what's the symbol here? Our symbol is... there we are. DNUT. Donut. options. All right. Okay, let's go out to. All right, so the August 17 calls. Ooh, is that right? Make sure that's not the put. August. That's got to be the put. That's the put. Okay, let's see where the calls are. Let's see, where is the symbol? Let's go to calls. Calls. Okay, so the August. Yeah, so the August 17 calls are at 80. The Novembers are at $1.25. You might want to sell the Novembers at $1.25, and then let's see where the put is. November, you end up buying two different puts. Let's see. Let's go to puts. Puts only. May. Augie doggies. There's a 12.5 put. In this way, you could be invested. It's in the 40-cent area, so you take in almost $1, and what is that? A 5% return, and then you probably go do it again, and then go into the let's see, where is the November 12.5? The November 12.5 is 3/4. So, if you think this thing is going up, it's in a weekly buy now, and you think things are going to get better, you could first go with the August put, and then from the August put you can move over to the November put, and that would give you anywhere from 3.5% to 5%, and you're in the stock. And if they take the stock out at 17.5, and you bought the stock at 15, $14.99, then you're talking about $2.50. That's a 16% return there alone. So what you do is go sell the November call, the November 17.5 call, buy the August put, the 12.5 put, and buy the stock, and you have basically a synthetic bond on. You're risking very little, solely because imagine if it closes out up in that area, then you've made somewhere around 5%. Now imagine that it falls to 12, okay? Then you might lose 3 or 4%, but you can still go do it again. Do the same thing over again, and make a 5%. Then you're up 2.5%. So it's not exactly a Bernie Madoff split reversal. It's very conservative, and at the same time taking that little 14-cent dividend all the time. The dividends almost pay for the put. How's that sound? Okay, how's that sound? Does that make sense to you? That's a way of creating a synthetic, complicated. How can it be that complicated? There's only 2 strike prices. How can it be complicated? There's only 2 strike prices. It's not like I'm having you put, butterflies in every direction or something like that. Sell a call, buy a put. That's it. That's not that much of a challenge. What do you mean retail dudes are blocked from... That's like saying there's no car insurance, or there's no house insurance, or there's no medical insurance. How can they block that? Well, if you own the stock, you can sell the call. And you can buy the put. Check it. Check it with your Interactive broker. I'm sure you'll have no problem. If you own the stock, you can easily sell a call against it. It's no margin whatsoever. And then at the same time, you go buy a put. Now you could do it again. In other words, you could do it half a dozen times on $1,500 probably, because you're not risking much. The risk factor is very low. Selling the call, buying the put, and owning the stock. The stock goes to $2, you're still going to have like, $13, 13 and a half bucks from it all. You know what I mean? You're only risking doing that strategy. You're risking maybe 75 cents on the stock total. That's on the worst case scenario. And the best case is you're making 5%. How can you not? Oh my God, that's it's like they should have no car insurance unless you buy a European car. But if it's an American car and you're owning it in Europe, not allowed to have insurance. I just have to drop the whole idea. Doc, it is like guns and firearms. I hear you. I understand, Janos. Totally, 100%. That's a shame. You should search around. There's got to be somebody out there that is willing to do that stuff. There's got to be somebody. Somebody wants to make money over there, don't they? Using options is the most conservative thing you can do. Oh my God. No wonder money comes to America. Who would want to buy a pair? Oh my God, they're really smacking that stock market down more and more. What's up with that? They just keep on beating up on it. The Dow's down 340 points now. All stupid because the regulations think they are the top intellect. Yeah, really. Then get rid of the insurance companies altogether over there too. Although options are insurance. That's what options are. Options are an insurance. VIX at 17. Yeah, that's let's go over to the VIX. I have that on this screen now for you. Where is it at? Right there. Where's the VIX at? I had it on there. I have it. I have something. I have it here somewhere. Let's see. Right there. It's probably in my intraday dookie. There it is right there. There's the VIX. Yeah, look at that thing. 1703. And the dollar index, I think the dollar index is at the high of the day again. Yeah, they've gone up to 105.73 now. What are they doing with gold? Let's see what they're doing with gold. Let's minimize that. Let's go to there. Gold is above 2,400 now. Let's go take a look at it on the intraday. Watch the way that baby climbed. Climbing. There it is, right there. So there's that $2,415.60. Went into the buy here. That's cool. Let's see. What are we following there? 936. Interesting action. And let's take a look at it on the daily. Yeah, look at that dollar index. No, it just made another high. 105.77. Woo. You can't trade options. Why would you even keep your money in Europe to begin with? It's like, why, you drive a car with insurance, you have health insurance, you have, house insurance. How can you not insure your equity? Yeah, it's insane. These guys are dumb from the neck up. All right, where am I heading here? I want to go to gold. There it is right there. There's gold. $2,416.50. They're putting a push on that one too. Let's see, not a broker. He needs, let's see, if a farmer wants an option for safety for his grains, let's see, he needs a firm that sells it to him, not a broker, a firm that goes to another firm and then those bastards just buy the put. That's crazy. And they put a premium on it too, I'm sure. My wife's brother is furious at this. He can't insure and fix his prices on his as a German bastard on his own. Some German bastard holds the market. Yeah, really. You would think that most Europeans would have accounts in America at this point, and and trade just in America, I guess. That's what it seems like. Wow, talk about insanity, Talk about insanity. Let's see. Where do we go from here? I guess what we'll do is, I feel your pain. Trust me. You know, it's like they're robbing you. That's what they're doing. They're flat out robbing you. There. Let's see. What else can we look at here? Might as well jump over to cable. I guess we'll get, but they're smacking all this stuff down at this point. I mean, they're just beating it all up. They're not supporting anything in here at this point. Let's see. There we are. Let's see. Cool. All right. Now, let's move this sucker over to here. And we'll go take a look at, see who's dinging me there. Let's see. Yana says, yeah, I don't blame them for not investing. And so the population just spends or puts it all in cash before purchase. Buy metal. Just buy silver and gold, I guess, at this point. Every time you get cash, go convert it at a flea market or something into gold and silver. Good morning. What time is it? AM and there we go. Yeah, I think that they force you into the metals market. That's all they do. There we are. Let's see what else Yana says. Yeah, they really slow the economy down, don't they? They really do. They really hurt it. All right, let's go check out cable. Let's see, where's it at? Let's check out cable right here. All right. Yeah, I'm getting heartache for you guys. I feel sorry. I mean, it's insane. They're not even letting you guys invest. And then the farmers, how can the farmers hedge themselves? You know, I mean, it's like insane. Options are a best way so that they can have limited risk with unlimited gain. All right, that's the euro. That's right, we were looking at cable. There's the cable right there. You can see it's at the lows of the day. And they're challenging these, you know, the blue line there. They're busting through it. So I guess I have a hard time believing this, but who knows what the hell they're thinking at this point. They may be going after the 3.8. That's hard to believe. You know, could they really go back into the 22s? I didn't think we were going to see that. There's the Swiss. Swiss is pretty quiet, so that's probably a good thing, you know. You know, it's not acting like the world's coming to an end. There we go. So, what do we got going on here? From there, let's go to the yen. Look at the yen. The yen has parked itself up above the 152. I think that brings something. I heard the Bank of Japan say that they were going to defend it in the 152 area. So maybe this is going to be really tough resistance up in here. You know, at the same time, I think we saw the Nikkei, you know, kind of firm for the week, but down for the week at the same time. Let's see if we can put the Nikkei up on the other screen. There's the Nikkei. Yeah, just barely down for the week, and we won't know if it's into the weekly until Monday. We won't get a feel for it there. Let's see. Yana says, last I heard, no rate hike or BOJ due to weak yen. Yeah, exactly. They're really, you know, they're trying. I mean, they're doing a lot of different things over there now. Japan is tired of this. They've been in stagflation now for I'm not sure how long now. 5 decades since the four decades for sure. All the way since the early '90s, they've been in stagflation. So in other words, inflation and a static economy. So in other words, they're not growing. Their economic economy has not been growing whatsoever. All right. From there, we go over to where do we go to? We go over to the Great Experiment. Boy, someone got nuts this morning in the Turkish lira, Euro Turkish lira. Look at that spike, all-time highs, and then they broke it down. They opened it up, took it. It was someone in there nibbling away. We're still in the sell now. Let's steal one of these. Let's put a sell in there. We've been in the sell since right here. And now we're look at that. We're flirting with a weekly. Don't ask me what they're coming up with now, but that's pretty cool. We've been in a weekly buy since half a year. So I don't know. Maybe we'll see some relief there. But they said that they could intervene in the forex market. They've got they have a 20 trillion, not billion, not million, a $20 trillion what do you call it? Not pairs trade, carry trade, a carry trade on with Japan. In other words, the Bank of Japan has a $20 trillion carry trade on. It appears that some employees will get rich short the dollar yen before the central bank orders hit the tape. Yeah, really. How many times have we seen that? Well, they're totally they've been losing members of parliament because of that. They've had to resign because of the LDP. That's the party in control. They had some type of fundraising or kickback scheme, something or another. A lot of people have had to resign, all the way up to the head of the Bank of Japan had to leave last year, and then now it's been like the finance minister's gone, and 5 major people in the party itself are gone. They've had to quit their seat, that type of thing. So yeah, it's wild times as usual. Always wild times over there when it comes to money. They like to do their thing. They're not afraid to do their thing. That's the problem. Do their thing. All right. From there, let's see. Where do we go from there? Let's jump over to. Let's see. Let's take a look at the Turkish, the South African rand. I would imagine, I would have thought it would have been even higher, which is really weird to begin with because gold is up. It should be down, but they've got all kinds of problems with that country. Trapped in that another triangle. When you go look at the thing, look at the price action in it. Oop, no, it's the other way around. Consolidate. It's trapped in a triangle too. A lot of these things are trapped in it. Everybody's trapped in it. A lot of in other words, it's all tight consolidation flag going on. It's not able to get out of its own way at this point. And so that's pretty much the whole process of it all. And I don't know if there's going to be a change out of that. I don't see it. I just don't see a change. It just seems to be totally trapped at this point, and there's no way of getting it out of that trap. Let's see. Nothing there. All right. So from there, what else we got going on here? Let's go take a look at the metals complex. We've already started on that, so let's go back to it. There's the gold. Gold's trading at 412 now. Got up to about 17, was it? 16? 1820. And at the same time, we got the silver trading at $29.32. Lifting up. Nice. And we have copper. Last I looked, it was way up. It's like 36. I'm not sure why it's not reflecting it on there, but let's go over to it on the beta. Where's copper at in the beta? Right there. Let's just show you what that looks like. Right there. It's been bouncing around in that 32 area, 35 area, bouncing up in there. Let's see if we can do this. Go like this. There it is. 34. Got up to 36. And then, last but not least, it's jump back to let's jump back to right there, the platinum. Keep on warning people. I can't imagine why anybody would want to be short this product at this point. And it's a imagine that gold is at 2,400. This stuff's at 1,000. I mean, we're looking at, before it was 45, 55% difference. Now it's heading towards 60% difference. That's crazy. I mean, all I hear is when you try to buy something platinum, it's more expensive than gold. But when you go to do it on the exchange floor, there's no problem whatsoever. From there, we jump over to the oil market. Let's see what the oil market is doing right there. You see oil now is almost up to $87. It's pressing up. Let's put Brent up there. Brent was really surprising me with the way they've been selling it down for the last couple days. And now they're finally lifting back up again. Not taking out last Friday's high, but getting very close. And, it's in a weekly buy for a while now. So, it's moving along nicely. It closed in a daily buy yesterday, and it's really battling to stay in there strong today. The Dow now is only down 260 points. So whatever scared them a little while ago has stopped. They've stopped scaring them. They've stopped scaring them. All right, let's see. Let's see. There we go. Answering somebody. Let's see, what else can we say about any of this? Let's see, there's the Brent. Let's go take a look at natural gas. I read a story today that explained why natural gas is so low here in the States. People who have companies that have oil wells are turning them back on again because of the high price of oil, and with it they're getting gas and the natural gas, and from the natural gas it's driving the price down, and that's why we're seeing with the gas. I guess with crude must be up in the 75-80 area. That must really put pressure on the price of natural gas, and so that's what we're seeing there. All right, now let's see what else we got going on here. Let's take a look at from the natural gas. Let's see. Cool. Okay. All right. So from there, we go over to. Not bad. We're going to get out of here in a few minutes because I want to be ready for the markets. Let's see. What do we got going on here? We are looking at, let's see, the stock in Spain. Let's see if it's pushed itself back underneath 20. Ooh, look at that. It's at 21. So it's not helping out Europe with the American natural gas going down. You can let's put it up on the screen there. There it is, right? Is that it? No, that's right there. There it is. Yeah, look at that. The natural gas company in Spain is lifting up. So that's not helping anybody. Anyhow, what else can we say about any of that? From there, I guess that's about it today. We got to make a run for it. I got a few things to do. And so, oh, good. Someone's starting to ask a question. Ask a question. Is there somebody asking a question? I would wish there was somebody asking a question. Nope, I guess that's about it. All right, traders. This is Doc. We got to come up with a title today, too. What should we call today's title? Got to come up with a title. I guess is what can we say about today's market? I'll tell you, the cuts are chances of a Fed cut. It just seems to be less and less. I think that's the best way to describe it. Did we really talk about anything else? We were talking about stock today. I don't know if we really want to talk about Krispy Kreme. So let me just do this. Let's put that title in there. And we'll go with that. And then what we'll do is we'll get out of here. So I'm giving everybody a chance if they want to ask a question. It doesn't seem like anything's going on there. All right. Fed cut moves further away. That's pretty much the end of the story. All right, traders. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Everybody have a safe and smart trading day, traders. Ta-ta for now. Oh, safe weekend. Have a safe, yes, be smart and safe.